Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. When you invest in a property, it really matters where it is. So how do you find a great market and what do you look for? Today, we've got an awesome guest who's going to talk about analyzing markets and the metrics that matter so you can find the next hot market. Today on the Real Estate Guys radio program. Are you achieving everything you want in life? What if there was a time-tested way for you to get all you've dreamed of? The most successful people in life set goals and keep themselves accountable. But how? The good news is that it's not rocket science. You too can learn the skills and unleash the motivation that will create success in your life. And now is the time. Hi, this is Robert Helms, and I'd like to personally invite you to attend Create Your Future, the 2022 Goals Retreat, January 7th to 9th in beautiful Lake Las Vegas, Nevada. This unique weekend event has been called phenomenal, inspirational, and life-changing by the thousands of people that have attended. Hear from some of them and find out more at realestateguysradio.com under events or call 888-489-7723 extension 18 to reserve your spot. Get your life back on track physically, spiritually, and financially. Attend the live in-person 2022 Goals Retreat on the second weekend of the new year. Click events at realestateguysradio.com to register. This is no dress rehearsal. Live the life you were meant to. Visit realestateguysradio.com or call 888-489-7723 extension 18 today. Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. Joining me, as usual, our co-host and financial strategist, Russell Gray.
Hey, Robert.
The key to picking great real estate isn't to make sure the roof is beautiful or the house is painted the right direction or it has the proper numbers of bedrooms and bathrooms, and why those things are important, just like rent ratio and demand and all that. At the end of the day, you got to have a great market. And we spent a lot of time in this show talking about the investment philosophy. That's your personal investment philosophy, who you are. That's kind of at the top of these four parts of investing in real estate, your personal investment philosophy. Once you figure out who you are as an investor, then you've got to find a market or markets that can deliver that kind of result. Once you're in a market or two and you've found a market that makes sense, you're going to spend a lot of time that we'll talk about today monitoring that market and watching for clues and paying attention. But once you've got that market or markets, then you find a team that can help you acquire property like a real estate agent or broker, manage property like a property manager. Maybe you're looking for a developer or a specific tax person or attorney. All those people are your team, and then you pick a property. And the mistake we see too many people make is they start with the property. They find a good deal, and they haven't really thought about the importance of the other factors.
Yeah, and they actually get it backwards. You know, they what they do is they go find a property, usually by the numbers, because they've been taught, hey, do the math, and the math will tell you what to do, which is my quote, and I agree with it, but it's always within context. So they pick a property that looks good on paper. Maybe they see it on the internet, or they hear a rumor, or they attend something somewhere and get on somebody's mailing list, and they start getting deals pitched to them. And then they have a problem. And so they take it to a team member, a property manager usually, and say, hey, here's my problem. Can you fix it for me? And the property manager struggles to do that typically. And then the investor gets the education. It's like, wow, I don't have the right team, or I don't have the right market. And then you back in through all the pain and losses to figuring out what your personal investment philosophy is. Like, gee, I don't want to do that again. So you definitely want to get that in the right order. And the beautiful thing is, if you do it the right way, one of the things you recognize quickly, just like you as a human being, you have your own unique personality. Markets have their own unique personalities. They have their own climate in terms of their policies and their tax and business and landlord friendliness. They have their own supply and demand dynamics. They have their own income, employment centers. They have their own quality of life and other amenities that people who choose to leave or live in that market are going to be either drawn to or repelled by, and things change over time. And some of that's reflected in the numbers, some of it isn't. And then the flip side of it is you buy a property and you buy it and you forget about it, and you remember that this market is a dynamic and it's changing all the time. And if you're not monitoring it, if you're not paying attention to it, the market can begin to shift on you and you don't catch it. And a market that was a good deal, well priced when you got in, all of a sudden is in a bubble. and is maybe about to burst, and you don't see it coming because you're not paying attention. So in today's show, we're going to kind of talk about all that stuff and the importance of paying attention to these things and how you actually do it and what you pay attention to.
Well, and market is critical, and that's what we're going to spend our time talking about today. Now, just so we don't leave any investor behind, if you've never gone through the process of figuring out who you are as an investor, what we call your personal investment philosophy, we're not going to talk about that today, but we do have an awesome free resource for you. It is an audio workshop with a PDF handout. All you have to do is send an email to PIP, Personal Investment Philosophy, at realestateguysradio.com, and you get the links for that. So assuming that you know who you are as a real estate investor, now your job is to find a market or markets that make sense. So the rest of today's program, we're going to focus on this because I'll tell you, this is where the rubber meets the road. If you pick a great property in a terrible market, it's not going to turn out well for you.
Yeah, well, I mean, and let's talk about paying attention, because there's all kinds of different types of real estate you can pay attention to. But if you look at the way the central bankers, if you look at the way the national economists, the politicians, when they think about real estate, when they think about the health of the economy, they talk about housing. You say, well, I'm not a housing investor. I'm a retail investor. I'm a commercial investor. Yes, but housing is really a great barometer of the economic vibrancy of any particular market. And if you have a healthy housing market, most often you're going to have a healthy real estate market overall in every other segment of real estate. So even if you're not a housing investor yourself, paying attention to housing and understanding what it's saying to you about what it's doing is really, really important. So today we're going to talk a little bit about how do you look at a housing market? What do you pay attention to? And the great part of it is we've got somebody with us who actually has been doing this a very, very long time, is really expert in it, and has mastered the art of going in and taking a look at a market, pulling out what matters, and then presenting it in such a way that it's easy to understand and use. And so I'm super excited about this show today and excited to have our special guest with us.
I fancy myself an amateur market analyst, but our guest today is really good at this stuff and puts together these amazing reports which can give you in a snapshot what a market looks like, and it's at a moment in time. And so really what you need to pay attention to is, as time evolves, what changes. We look at all kinds of things when it comes to markets. We'll talk about a lot of those when we come back, and you'll meet our guest, Ingo Winzer, today on the Real Estate Guys radio program.
Live nationwide, you're listening to the Real Estate Guys. Find out more at realestateguysradio.com.
Registration is now open for the Real Estate Guys 20th Annual Investors Summit. Imagine spending an entire week with like-minded investors, world-class educators, and real-world professionals. Returning in 2022, the editor of the Gold newsletter, Brian London, international real estate developer Beth Clifford, the author of The Creature from Jekyll Island, G. Edward Griffin, Jim Rohn's 18-year business partner, Kyle Wilson, and the rebel capitalist, George Gammon. And joining us live and in person for his 10th Investors Summit, best-selling author and the Rich Dad advisor for real estate, Ken McElroy. Plus lots more to be announced. It all begins June 10th, 2022 in beautiful Belize. Visit realestateguysradio.com and click the tab that says Summit to reserve your spot. Go to realestateguysradio.com, click Summit, and make plans to spend a week with the Real Estate Guys, George Gammon, Ken McElroy, and an all-star faculty on the 20th Annual Investor Summit on Sand.
If you love real estate and have always wanted to own your own business, listen up. The Real Estate Guys and their panel of experts want to teach you how to go full-time fast in the real estate syndication business. These next few years may go down in history as one of the best times ever to acquire investment real estate. There are deals everywhere if you know where to look and how to assemble the resources. The Secrets of Successful Syndication seminar will show you how to make big money doing big deals from a team of experts that have syndicated projects totaling more than $1 billion. Don't wait for someone to give you a raise or create a job for you. Attend the Secrets of Successful Syndication and learn how to build a team, raise capital, find deals, and make full-time money in 6 months or less. Go to realestateguysradio.com and click on events. All the big players use syndication as a way to diversify risk, optimize profits, and earn big money. You can too. Go to realestateguysradio.com and click on events.
Hello, this is Robert Kiyosaki. I'm the author of Rich Dad, Poor Dad. And if you're serious about learning how to invest in real estate, listen to the Real Estate Guys. They really know what they're talking about.
Welcome back to the Real Estate Guys radio program, now in our 25th year of broadcast. We're talking today about the importance of market selection and, even more important, market analysis and continued market analysis, because markets can and do change. In order to help us navigate through that, let's welcome to the Real Estate Guys a gentleman that knows quite a bit about that, because that's what he does, Mr. Ingo Winzer. Hey, Ingo, welcome to the program.
Hey, thank you, Robert.
This is awesome stuff. You live in this world, but take us through how you got into a position to be the market wizard that you are.
Well, it's really interesting because even though a lot of the stuff we talk about is economics, I'm not an economist. My background is actually in corporate finance and in financial analysis. I started looking at real estate markets about maybe 35 years ago when I was working for a mortgage insurance company. And they were very interested in figuring out how markets are going to do, because they were insuring properties across the country. And it turned out, if you looked at some markets, they were doing well, and other markets were not doing well. And the question is, how can you tell beforehand what's going to happen in the market? That's basically what real estate markets are. I eventually struck out on my own, because I thought that there was a market to be met here, because nobody seemed to be doing this kind of stuff. Even in the large companies, you didn't get any good analysis. And I figured that I maybe could provide investors an easy way to look at markets. I think it's an advantage that I'm not an economist, because I'm not talking gobbledygook economic speak. I'm really trying to have people look at some stuff and understand why this is important to the kind of questions they might have about a market. So, a lot of what I do is trying to analyze numbers. But the second part is really say, well, how can you make this intelligible to somebody who, doesn't want to flip through a 20-page report or a 100-page report, who, doesn't want to see tables of numbers. I deal with numbers all the time, but I actually hate numbers. So most of the stuff, and when I'm presenting numbers, I show them as graphs, because that's pictures are much easier to understand, both for myself and when you're trying to explain it to somebody else.
Well, such a good point. And as real estate investors, there's really two kinds of primary areas when we're interested in markets. First is when we're looking for a new investment and we want to discover a new market. We hear a buzz. We hear, oh, there's a lot of jobs going in here, or wow, this place is really booming in terms of real estate rents or prices. And then the other is, once you're in a market, it pays to pay attention, because sometimes the market changes without you realizing it. I see so many investors that did a lot of market analysis up front, picked a good market strategically, and then kind of set it and forgot it. And that's not good either. So let's talk about big picture. You can look at a lot of different things in a market, but as Russ alluded to, the single family home market is where we get a great deal of detail. So when you're starting, say it's a market you don't know yet, what are the most important things that you want to seek?
Well, the thing I always look at first, and it's ironic because right now it's sort of an irrelevant statistic, is what's happening with jobs in a market. Normally, there's a very high correlation between jobs and demand for housing. If people are moving into a market because there are jobs there, they're going to need a place to live. A lot of people want to buy a house, but a lot of people also start renting first. And a lot of people want to stay in rental housing, maybe rent a house as opposed to an apartment or so, because of the types of jobs that are being created in markets. In a market like Memphis, for example, it's a lot of blue collar jobs. In a market like San Francisco, until recently, there was a lot of very high paid jobs that were driving the real estate market.
Right.
So it always depends what kind of economy you're talking about.
Yep.
So jobs is always the first thing, and you want a market that has good job growth, but not spectacularly high job growth, because there's always as Russ was mentioned, there's always the danger that a market will get into a bubble. And then you have some much more difficult decisions to make as an investor. So that's the first thing. It's just jobs. And the second thing, it's supply and demand. So, and where does the rubber meet the road? It's in home prices. So that's always the second thing I look at. What has happened with home prices recently, the last few years or so? There's pretty good data on home prices in markets across the country from the FHFA. They provide a quarterly home price index, which is extremely useful. And it can give you a flavor of what has the balance between supply and demand been. There's no such thing as a good market or a bad market in that sense, because if you have a market where home prices are steadily increasing at 3% or so a year, there's nothing wrong with that, really. It's a very steady market. On the other hand, you have some markets that are always boom and bust markets. A lot of them in California, where people move in and then they move out. So you see that reflected in the equilibrium between supply and demand in home prices. So those are really the two big things, And I mentioned before, you always want to be careful about whether a market may be getting into a bubble, which is a concern right now in lots of places across the country. So we not only measure what's happening with home price, but we also make a comparison between home prices and what's happening with income in a market.
And those are the two things you're talking about: jobs, people's income, and prices. And you assume people going with good jobs, they're able to pay higher prices. That's going to raise that. But just because house prices are going up, if job income is not, that's not necessarily a great metric. And we've seen markets that have gone out of the reach of the average employee. That's happened in a lot of places in the country. So I think that's critical, comparing income to home price.
Yeah, and in the long run, income and home prices sort of have to match. In the long run, doesn't have to be every year. In the long run, they have to match. So when home prices really get out of whack with local income, that's when you can tell that there's a danger of a bubble happening. We calculate a certain metric called the income price, which basically says, here's what home prices should be if you just go according to local income. And then you compare that with what's actually happening with home prices. And then you can see when the risk is starting to grow that there may be a bubble. Some people like bubbles. If you want to speculate in real estate, that's what you're looking for. But if you're longer term real estate investors, first of all, you might not want to jump into a market at that point. And secondly, if you've been in a market for a while, you might want to think that this is a pretty good time to get out of that market, because you're going to see some high prices you're not going to see again. So you want to look at it on both ends. It's not necessarily a bad thing, but generally it just means it's a riskier situation. And that's really the purpose of what the reports are. They're telling you where is there more risk for an investor, of various kinds. It could be prices are going too high, or it could be that just demand is just low. There's just no demand at all. And this is probably not a market you want to get into, or demand is falling off, and maybe now's the time to get out.
Now, Ingo, you mentioned the comparison, and this is critical. If I find a market that seems interesting and all of a sudden I'm noticing, hey, the home prices look good, incomes are rising, all those things, there's a couple of ways to compare. We talked about one, which is comparing, say, every quarter or every month what's happening in the market that you're in. So there's what's happening today and what the market looked like, say, a year ago. And then as time goes by, I want to keep my head in the game. And I know that's something that you help people do because you publish reports monthly. But the other part is comparing market A with market B. That's how I know I have a market that makes sense. And today you look at a lot of markets and start to see these patterns. Now, I know part of your job is assembling information from a variety of sources and yet making it pretty simple. So focusing on these key metrics makes sense. What else do you look at?
Well, lots of metrics to look at. What we'd really like to know in all markets is what's happening with the population. Are people moving into that market, or are they not moving into that market? If we could tell right now where people are moving, that's what we really want to know. And we look at jobs as sort of a replacement for that, because by the time you find out what's going on with the population, it's already 2 years ago.
Right.
Because that's how long it takes the government to do their surveys and to measure things. Whereas when you look at jobs, these are the latest statistics are always from last month. So that's sort of why we look at jobs. But we'd really like to look at population. We'd really like to look at income. That's another measure. Well, the government measures it, but by the time you got it, you don't know much about it. But then obviously, you always want to look at home prices, and you always want to look at rents. And one of the key things to look at is the ratio of rents to home prices, because it basically tells you how much an overlap there is between the homeowner market and the renter market. If home prices are relatively low compared to rents, then it's a great market for buying an investment property and renting it out, a single family home. In some other markets, you really can't do that because the homes are much too expensive. And the only way you can buy that is to then jack up the rents, which may not be possible in that market. I keep getting down to this point. There's no good or bad market for everybody, but you have to know what kind of market you're in. You can make a great investment in a lousy market and a lousy investment in a really good market, but you need to know sort of what's going on, because if you're just looking at a property, it looks like a great deal. Well, it may be a great deal today, but it may not be a great deal, a year or two from now, because you're in a riskier part of the market to begin with.
And of course, it really depends on what the investor's outcome is. If I'm going to buy and hold a property to rent out for the long term, that's different than if I'm trying to take advantage, say, as a home builder. And I know that there's a lot of folks that look to your research, because sometimes you can see that there's a market that is underbuilt. There aren't enough rental units. When you see rents start to go up and there's demand on the rental side and the supply gets squeezed, that's also a challenge. So how much do you pay attention to the supply side?
Well, a lot, because nationally about 70% of housing is single family homes.
Yep.
And let's say 30% is rental properties, which includes single family homes, but in most markets it's generally apartment buildings. But that varies a lot from market to market. And the percent of properties that are in rental mode is an important indicator. I mean, you can even look at that down to the zip code level to find out, where are the renters, because you want to be in a market where there are lots of renters, or you may say, well, there aren't any rental properties, so maybe I should be the first one to put one in. Once again, there's no right answer about these things, but as an investor, you need to know what kind of a market you're talking about. Are you talking about mainly a renter market where there are lots of renters? One of the other things to consider is that the average renter in a property stays there less than 2 years, which means that every year and a half or every 2 years, you're going to be looking for new tenants or replacement tenants. And that's why it's so important to know what segment of the market you're in. If you're in a very high priced segment of the rental market, when economic times are tough, it may be much more difficult to find renters. When the economy is down, there aren't that many people who are going to spend a lot of money for rent because they can't. Conversely, if you're at the low end of the market, there are other factors that come into play, where people's finances may not be great all the time, and you have different kinds of issues to deal with. So you need to know where you are. You need to know if are there mainly renters in this market, or are there mainly homeowners in this market, and what's the balance between those two. So we always look at jobs, we always look at home prices, we always look at income as much as we can, and population, and a few other things. But what it comes down to is that there are many ways to look at a market. I found it's very difficult to come up with complicated metrics, which may be useful to an economist, but they're not useful to investors, because most investors don't want to be economists. They want to be mathematicians. They want to be investors. One reason that may be so is because investors tend to be people, who take action, and economists tend to be people who constantly tell you, oh no, maybe you shouldn't do that. So you want to provide something. This is partly of why we've created these reports that are, you might say, well, it's a 2-page report. How much can there be in there? We've distilled things down so that we think it is easy for people to see what kind of a market they may be looking at, or what kind of market they're already in. What kind of jobs are there? How are the individual market segments doing? What's the long-term prospects? There's a lot to consider, but when you boil it down, it comes down to a very, very few things that are really important and that people really need to pay attention to.
One of the keys is simplicity. I remember we went out on a particular real estate project and we commissioned a study, and it was 150 something pages, and it was in great detail and great depth, and confusing as all could be, and it's like, wow, there's just so much here. I think the art is to take a lot of complex information and distill it down, which is what I love about your reports. On our Jacksonville field trip we did just a few weeks back, you were kind enough to let us provide one of your reports in the workbook, and it's just 2 pages, but in those 2 pages is a ton. When we come back, we'll talk about specifically what's in these, and we'll tell folks how they can get a free copy of one so they can see an example of your work. Our guest is Ingo Winzer. We're talking about analyzing a market and the key things you need to know as a real estate investor. More when we come back. Plus, we'll play real estate trivia next. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Real estate investment advice right in your mailbox. Sign up for the free Real Estate Guys newsletter at realestateguysradio.com.
Real Estate Guys listeners, are you tired of losing real estate deals due to financing issues? Have you had enough of waiting on banks, lenders, and investor groups to fund new projects? What if there were a way to eliminate all the hassle and invest in real estate on your own terms? I'm here to tell you there is. Patrick Donahoe here from Paradigm Life. I'm an Investopedia Top 100 Most Influential Financial Advisor, and I recently wrote a best-selling book about the financial strategy that changed my entire investment model, and the one that could change yours. To get a copy of my book for free and learn how you can maximize your real estate portfolio by acting as your own bank, send an email to mybank@realestateguysradio.com. Don't make another real estate deal without reading my book first. Email mybank@realestateguysradio.com now to get your copy for free.
Self-storage is an asset class that has stood the test of time. Going into the Great Recession of 2008, self-storage had the least negative impact of any of its commercial real estate peers, and it had explosive growth coming out of that time during the recovery. Fast forward to 2020, and you'll see that same pattern during some of the worst part of the pandemic. Hi, my name is Dave Zook, founder and CEO of The Real Asset Investor. Our operating partners are some of the best in the business, and we've had great success over the last decade buying mom and pop operated self-storage facilities and taking them to the next level by forcing value through increasing the square footage, adding climate controlled units, bringing in our professional management teams, and turning the project into an institutional target. We have self-storage investment opportunities available for accredited investors who are interested in investing in this space for cash flow, tax impact, and huge equity appreciation. Reach out to us today at selfstorage@realestateguysradio.com.
Hey everybody, it's Ken McElroy and I'm on with the Real Estate Guys, and I'm very excited to be a guest and a speaker at the Investor Summit on the Sand in Belize coming up. If you haven't signed up, be sure to do so.
Welcome back to the Real Estate Guys radio show. Thanks for tuning into the program. If you want to make 2022 your best year yet, then you need to get clarity. Easy to say, hard to do, but we'll help you out at the 2022 Goals Retreat. It's called Create Your Future. It happens in Lake Las Vegas, the first full weekend of the new year. Just a few seats left. You can get one if you go to realestateguysradio.com under events, where you'll see Create Your Future. We're talking today about market metrics, how we find great marketplaces and what we look for. Before we get back to our interview with Ingo, it's time to play real estate trivia, your chance to win a prize by knowing today's real estate trivia question, which kind of has something to do with markets. When you hear the question and think you know the answer, send your best guess to trivia@realestateguysradio.com. Trivia@realestateguysradio.com. Give us your name, the answer to the question, and your physical mailing address, because if you're the first to get it right, you're going to get an awesome book sent to you called Passionistas. Tips, tales, and tweetables from women pursuing their dreams. This is a collection of awesome stories from a bunch of great women. That can be yours if you know today's real estate trivia question. Last week on the show, we were talking about the world of turnkey real estate opportunities with our friends Terry and Liz from Mid-South Homebuyers. We asked this: originating in Tennessee, the Grand Ole Opry holds the title as the longest running radio show in U.S. history. When did it start broadcasting? Well, way back in 1925. And it still broadcasts live every Friday and Saturday night from Nashville, Tennessee. Here's our real estate trivia question for this week. There's lots of metrics to look for in a market, and one of those is the days on market. Here's what I want to know. For last year, 2020, which real estate market in the U.S. had the lowest median days on the market? Yeah, this was the market in the U.S. last year where you could sell your house the fastest. The lowest number of days on the market. You know what it was? If you do, or you want to take a guess, send your best guess to trivia@realestateguysradio.com. Trivia@realestateguysradio.com. Give us your name, your guess, and your mailing address. First person that gets it right gets this awesome book, Passionistas. That's today's real estate trivia question. We're talking about analyzing real estate markets, one of the most critical things for real estate investors to understand, and it's not static. We're going to take a look at it in a moment in time, but then we're going to also watch for the evolution of these things. Our guest is Ingo Winzer, and he's a market analyst who puts together these really cool reports, and they're simple, they're easy to read, but they do a great compared to what? So Ingo, we talked about the comparison before. One of the things I like to compare to is two markets side by side, but what you do a great job of comparing to in your reports is the national average, right? If I know what's happening in the nation, then I can see how my market fits. Can you speak to that?
Yeah, and in fact, we can talk about some of the very specific statistics that we mention in the report. We don't focus on them, but it's important to know. For example, one of the things we look at is total income in a particular market, and I don't mean just income per person. I mean the total income, because that's really a measure of, well, maybe a whole bunch of people in the market already are making a lot more money. That'll drive up the income, and that'll drive up demand for housing. Or it could be that a bunch of people are moving into a market. That can also drive up the total income. So total income is a pressure on home prices. When we look at a market, we say, well, we're talking about Jacksonville here. And you can see that over the last 3 years, the total income in Jacksonville grew 19%. Now, the US average was 15%. So you're already looking at a market that looks like it's growing better than average. Obviously, you look at the average home price versus what the national home price is. You're looking at what's the average rent in the market versus what's the average rent in the country. We've sort of figured out what seems to be important, but it's also really easy to understand why this is important. We also look all the time at how is job growth versus job growth in the country. What's right now a really important statistic is what is the unemployment rate in a particular market? Because we're all hoping that markets are in recovery mode and eventually again growth mode. And the way that's going to happen, some markets are going to get there faster than others. In a way, this is a difficult time for anybody trying to analyze markets, because we're in a situation we haven't seen before, where this kind of economic dislocation is taking place. We haven't seen that before, but also means that this is an incredibly good time for investors to be looking at, well, where should I put my money? Because things are changing very rapidly in some markets. Others, there's some markets going to be staying behind in the recovery. Some markets are moving ahead. You already see that in Utah, where some markets doing fantastically well. And other California markets, which have been growth markets, are doing relatively poorly right now in terms of economic recovery. It doesn't mean necessarily that the home prices aren't jumping in most markets right now. That's the kind of comparisons that we try to make is, how is the market doing versus other markets? How is it doing versus because you can just compare them side by side. How is it doing versus the national average? And these are easy comparisons. People can understand that, I think, fairly easily. There are a lot of statistics where I could give you an enormous page of statistics for one market and tell you everything that's going on right now and compare it to other markets, and you would go crazy because it's totally unintelligible. A lot of what we've tried to do is say, well, these are these statistics you really, really need to look at. Nobody can remember 7 statistics anyway. But if somebody can tell you 2 or 3 good things you got to look at, that's what I like. That's when I'm trying to figure something else out. I said, please just give me one or two good statistics. I'm not going to remember all this stuff.
Well, I'm looking at one of your reports, and before we're done, we're going to let the listeners get a copy of one so they can understand it. But I love the fact that right off the top, you've got some metrics. So you talk about expected returns. Now, that's a long-term look, but you talk about cash on cash, equity, and the risk in the market. And then it's narrative. So you're talking about kind of here's what's happening right now, here's what we're seeing. And I know you call that from all kinds of information reports, but if you go to the trouble to read all that stuff and distill it down to 3 paragraphs, that's awesome. You talk about the economy, you talk about risk in the market, and then you get to the charts. And the charts are great because, again, they're simple. You've got a chart on the change in home price over the last several years. So that's a really visual report where I can see. And even with the strangeness that's happened in the last year, right, that's still valid information because we're seeing a lot of markets that are appreciated, but it's always what's the history been. So being able to look at that, talk about the importance of the change in home price, not just the direction.
Yeah, well, the change in home price basically means, we were talking before about what is the balance between supply and demand. And, when the change in home price, by the way, this is measured always from the most current quarter to the same quarter of the previous year. So there's no adjustment that needs to take place. So these are actual numbers. These are hard numbers, and these are really, really high quality numbers. The change in home prices in a market, first of all, for a market like Jacksonville, which we're talking about right now, if you look at what's happened over the last few years, well, prices have been increasing at least 6% in that market for the last 3-4 years. And that by itself tells you that this is a good market to be in. People are moving there because 6%, that's more than the average.
Yeah.
And it just means, there's some markets that just attract people, a lot of markets in Florida doing that. So you're going to have a higher level of demand in those markets. You can look at some other markets, that where prices are only increasing 3% a year over the longer term. And that, we've seen a lot of those markets over the last 15 years or so following the last recession. It's a measure of how strong demand is in a market. And, you can increase supply in hot markets, but you can't decrease it in poor markets. Poor markets will generally stay poor for a while until people start moving there again. And that happens all the time in markets across the country, that lousy markets turn into great markets turn into lousy markets. There are always dynamics at play. But the home price change, what we're showing there, is a measure of what demand has been right now. And that's you're seeing the situation right now. When we talk about job growth, that basically talks about what is demand going to be in the relatively near future.
Yeah.
So you get two pieces: what's been going on, what's likely to happen next.
Well, in a lot of markets, transitioning over to the job growth point, which is obviously important. We want there to be an increase in jobs and the right kind of jobs, to your point earlier. But for many of the markets post-COVID, there was negative job growth. So we look at the chart here from Jacksonville, and the good news, it's trending in the right direction. There's less and less negative job growth until now. We're seeing it's starting to turn the other way.
Yeah, and as I said, if you look at this chart for any market a year ago, they were all negative, and some highly negative.
Yep.
The chart right now, this chart shows it's a comparison of where jobs are now versus where they were before the pandemic. It's sort of and normally we don't show jobs every month. It's a special adaptation we've made. One of the nice things about the way we produce our reports is that if something new happens, we can change right away. Normally, we would show jobs by quarter. Well, in this past recession, that's ridiculous because you want to know what's happening right now, and it's really important because when we're looking at Jacksonville's almost back to the level of where jobs were before, and that's a really, really good and a lot of markets aren't. I was looking at Reading, Pennsylvania the other day because I couldn't figure out why home prices were jumping in Reading, Pennsylvania. And it doesn't make any sense because jobs are still 10% below where they were. So, no recovery in that market. But in Jacksonville, they're almost back to zero. As I said, there's some other markets which are now above zero. And, that shows you, is this a strong market or not? Is this a market that's recovering quickly or not? So even though the job growth is still negative compared to where it was, for a market like Jacksonville, things are looking in the right direction.
Now, Ingo, one of the things investors sometimes have a problem getting their mind around is this: just because home prices are going up doesn't mean there's not opportunity. Sometimes that's one of the things that we see. To your point, all of a sudden, why are these prices going up in this particular market? You want to find out. But generally, there's a difference between market price escalating and something being overpriced. And I love on the report how you point that out. You talk about that when home prices are higher than the income price, and you have a chart that compares these two things, that means the market is overpriced. Again, compared to everything out. This is a chart that looks at the difference, and you talked about this early on, between home price and income.
That's right. Yeah. As we said, in the long term, if you look at a lot of data, like 30 years of, even 40 years of data for some markets, we have that. And you look at the relationship between income and home price, in the long run, they always have to be in sync. And in fact, one of the things you find out from our analysis, that when a market is, when actual home prices are well above this income price, they always come back down. Or they don't have to come back down, but they can stagnate and wait for income to catch up. So this is an enormously good indicator of how much extra risk you're seeing in a market. Doesn't mean you can't invest there or you shouldn't get into a market, but it does mean you have to be aware of the fact that prices are probably higher than they ought to be. Now, they can stay higher than they ought to be for years. So it's not necessarily a bad situation, but you need to know where they are. And in fact, one of the other things is that we know is that basically rents go along with income. So in a way, this chart is also shows you, well, if home prices are high, that means there's probably going to be a lot more demand for rentals in a market. In overpriced markets, people can't afford to buy homes. A lot more people are going to be interested in renting. So in a way, high-priced markets are actually good markets for investors in rental properties.
So you break down a lot of complex information and make it easy to see, but then also it's that frequency. So talk about that. Coming from a different angle, you've got to read all this information and determine the jobs and income and put this all together every month in a multitude of marketplaces. Take us through that process.
Yeah. Well, the situation in real estate markets generally changes slowly.
Yep.
And the nature of most real estate markets is that not a whole lot changes from month to month, but sometimes it does. And because there is new information on jobs every month, and because it's very recent information, it's important to show that information. And especially because that is our best indicator of what demand is going to be like in a market. Often in a market, you see that the job data is it's the same every month, and all of a sudden it changes, either higher or lower. So it would be silly for us not to take advantage of that. Now, having said that, you don't need to pour over our reports every month necessarily, because a lot of the stuff is going to be the same. Partly because we don't have new information about home prices every month. That comes out every quarter. That's going to stay the same. It's really the jobs that change. Sometimes during the course of a month, we find out that there are new statistics that are available. Not necessarily, let's say, population growth comes out once a year. Well, when it comes out, you want to know what it is as soon as you can. So that's really the two reasons why these reports are every month. One is that there's always new data. And secondly, sometimes it's really important because in some markets, jobs can move very quickly. And you certainly need to look at these every quarter, because that's when the home price data come out. You need to know what that is, because that's telling you what's going on in the market right now. Also, the advice that we give based on how some of the data may change, that will change too. So we're not going to tell you the same thing every month, because circumstances can be different very quickly.
Such a good point. Well, this has been great stuff. Hey, if you're interested in getting a sample copy of Ingo's reports, they're called Metro Market Monitor, and all you have to do is send an email to marketmonitor@realestateguysradio.com, marketmonitor@realestateguysradio.com. You'll get to see the report from Jacksonville. And then as time goes on, if you're interested in that or other markets, you can certainly learn about the different markets that Ingo covers. Ingo, great having you on the program. Thanks for sharing with us today.
Thank you very much, Robert.
You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Need help with your real estate investment portfolio? Check out the resources page at realestateguysradio.com.
Forbes rated Memphis the best cash flow market in the nation. And our good friend Terry Kerr at Mid-South Home Buyers has been the premier turnkey rental property provider in Memphis for over 13 years. With an A+ rating for the Better Business Bureau, Terry has renovated over 750 houses. Real Estate Guys listeners have snapped up hundreds. Discover what these satisfied investors already know. Mid-South's properties are completely renovated with a 1-year warranty and a lifelong rental guarantee. They're affordable, well-managed, and easy to own. Perfect for beginning investors and veterans alike. Get in on the action. Contact Terry and his team via email at midsouth@realestateguysradio.com.
Hey, ever wished you could go back in time and do some tax planning? Now you can, just like Marty McFly. Lucky for you, a brand new federal law just made this possible with an EQRP to get tax deductions and reduce your taxable income from last year, so you can use that tax savings to invest in real estate, Bitcoin, gold, even your own business. Whether you're a full-time investor, doctor, government employee, even if you have 5 or 50 employees, the EQRP works and is your secret weapon, and now it's retroactive. Hey, I'm Damian Lupo, and we have your solution. By the way, if you got bad advice and used an IRA for an apartment syndication, you are sitting on a U-bit time bomb. But don't worry, there's a solution, the EQRP. The EQRP company is ready to help you get control of your money, kill U-bit, and help you pay way less taxes. Want to learn more about this strategy? Send an email to eqrp@realestateguysradio.com for my special EQRP report. Paying tax or letting Wall Street suck you dry is dumb. Your first step is freeing your retirement money by sending an email to eqrp@realestateguysradio.com today.
For thousands of years of human history, silver has been recognized as money. Then in 1965, the United States took silver out of the financial system. But did silver stop being money? Smart investors don't think so. And ever since, when there are concerns about the quality of the currency, alert investors seek shelter in silver and gold. As the size and frequency of major financial crises grow, silver is attracting a lot of attention. To help better understand the what, why, and how of silver, watch the free 9-part series, Making Sense of Silver. Everything you always wanted to know about silver but didn't know to ask. Featuring 30-year precious metals veteran Dana Samuelson. Send your email requests to silverseries@realestateguysradio.com. Whether you own silver now or you're wondering if it's too late, email silverseries@realestateguysradio.com.
Hello, I'm Brian Tracy, and I'm here today with Robert Helms. He's one of the real estate guys, and he always has wonderful ideas to share with you that can improve your life, improve your income, and help you to achieve more than you ever thought possible.
And welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. Tell a friend about the Real Estate Guys. Oh my gosh, what a wealth of information Ingo is.
Yeah, absolutely. And I'll tell you, this is really hits home for me. It's very, very important. I remember back in the big run up from 2000, after the dot-com bust until the great financial crisis, real estate had a fantastic run. And we were both operating out of Santa Clara County, or Silicon Valley as it's known today. And there was a lot of activity up in Sacramento as people were being priced out of the Bay Area, the San Francisco Bay Area. They were moving up to Sacramento. And we were able to buy income producing properties that were selling for about 7 to 8 times their gross rents, which was just a back of the napkin metric. And I remember in that market, I had a young lady that was an investor there, and I was coaching her, and she had bought a little property, a duplex, at 7 times gross rents. She refinanced it 2 or 3 times in the run-up and harvested all kinds of equity, which is fantastic. But what happened is by the time she did the last cash-out refinance, that thing was trading for almost 18 times gross earnings. And if you don't understand that metric, or how the disconnect between the rental income and the sales price was telling you this market was going from fundamental to speculative bubble, then you couldn't see the bubble getting ready to burst. And in hindsight, I remember saying, hey, this thing looks like you should probably sell. She chose not to. And sure enough, the thing burst. She was totally upside down, and it ended up being painful. So I'm really, really adamant about the importance of paying attention to supply, demand, and capacity to pay, which is basically what these reports break down. So, and the fact that he does it in a brief format where it's 2 pages and you can look at the report, get all the information you need to see the trend, to see the shifts. Trends are kind of what's going on, but a shift is when the trend changes. And you have to be able to recognize both those things.
Well, and you also have to do it in context, meaning it doesn't mean a whole lot if you go look at 20 different marketplaces if you're not going to do anything. I remember I had an appraisal student come up and say, Robert, I'll have you know I'm researching 18 markets right now. And I said, you're wasting your time. And she looked at me. I'm like, I'm look at 4 or 6 markets, like the compared to what on markets that actually would be apples to apples and not, apples to chickens, as my dad used to say. You've got to pay attention to the market you're in. So what I love the reports for is markets that I'm already in, I can get the quick lowdown in about a minute and a half. Ingo does a great job of the narrative at the beginning. So if I just read those 3 paragraphs, I got my mind around it. You're more of a charts and graphs guy, so I'm sure you probably gravitate right to those standard 3 charts and go, got it. Now, if you want to take more time, you read the rest of the report. If it's a market that you're seriously considering or a market that you're active in, you may know some of the deals, you may not. But when you do read it month to month, and I get that not all the information changes monthly, but when you read it month to month, you start to get a sense, a feel of what the market's like. I think the time to start reading reports like this is before you're in the market. When you start thinking about it, gosh, I wonder if Memphis is a good market. I wonder if Dallas is a good market. I wonder if Boise is a good market. Well, you get the reports and you start looking and you start getting a sense. And if all of a sudden you're seeing report after report saying the market's overpriced, there's a lot of risk, well, now's not the time. On the other hand, there are jewels in there. And the great news is that these reports are available. They're inexpensive. They're in a handful of markets now, but that's going to change every month.
Yeah, I think one of the things that's really important, because you mentioned the narrative, and we have always relied on our boots in the ground team for market information, market data. But you got to be honest, people who are in the business have an agenda to pump their market, to sell their properties. Ingo doesn't have that agenda. Ingo's going to deliver the data, and he's going to deliver a narrative based on the data without a dog in the hunt as far as wanting to sell a property or not sell a property or promote a market or not promote a market. He's really just providing the data. So we felt it was really important to get this into the mix. And so we engaged Ingo to produce these reports for the Real Estate Guys audience. And we've got a collection, about a dozen markets right now. We're going to be rolling out 2 new markets every month based on listener feedback. So if you're out there and you're saying, hey, I'm interested in a market, I would like to monitor that market, then send an email to marketmonitor@realestateguysradio.com. Get a free sample of a recent Jacksonville report, just a market that we happened to have visited recently that we thought would be a good example report for you to take a look at, and then cast your vote. There'll be a link there for you to cast your vote on all the different markets that we're exploring. And then based on vote, we'll release those and we'll let you know as soon as it comes out. So we're super excited about this service, super excited about the relationship with Ingo. Of course, these are premium reports. They're not free, but we've got it set up so it's really affordable based on how much time it would take you to assemble all this information. It's really a screaming deal. So if you send an email to marketmonitor@realestateguysradio.com, you'll get a link to all the details and your opportunity to cast your vote.
Market is critical. It's maybe the most critical thing. You've got to have a great team, but I always say that, you've got to look at the whole picture, not just the property, not just the property manager, not just the market. It starts with you under your personal investment philosophy, but it is one of those evasive things for people. It's easy to get to know yourself. You go through the exercise on personal investment philosophy, which again, if you haven't done that and you'd like to, just send an email to PIP, Personal Investment Philosophy, at realestateguysradio.com for the audio workshop. Take you less than half an hour to do it. We did it on the bus in Jacksonville as we were headed down to Ocala, and that was fun. And you get in touch with who you are, but the market data changes. And I think because it changes and because there's so much of it, it's easy to get overwhelmed. And another thing I love about these reports is they're simple. It's deceptively simple because as you read through, you're going to learn a lot more than you would probably think you could learn on 2 pages. It's like the old uniform appraisal report, the URAR. You read that report, you're like, there's so much here, and it's only 2 pages. Yeah, but it's crammed full of stuff. The reports are like that. Get one in your hands, take a look, see what you think. Market Monitor at realestateguysradio.com. Big thanks to Ingo for taking time out of his busy day, not analyzing properties for a little while, but talking with us about it. And next week, we've got an awesome show for you. Until then, go out and make some equity happen.
This episode of the Real Estate Guys radio show is brought to you by Paradigm Life. Powerful cash management strategies using life insurance. Learn more at beyourbank.com. Mid-South Home Buyers, low-cost, turnkey cash flow properties in Memphis, Tennessee. Corporate Direct, asset protection strategies for real estate investors from attorney and Rich Dad advisor Garrett Sutton. Find these and other great companies under the Resources tab at realestateguysradio.com. To learn how you can expose your product or service to the Real Estate Guys audience, call 888-489-7723 extension 4. That's 888-489-7723 extension 4. Or use the feedback page at realestateguysradio.com. Thanks for listening, and we'll see you next week right here on the Real Estate Guys Radio Show.